Hey, good morning. This is Mayor Valensky with Driving Markets. As I said on the weekend, what happened on Friday was so significant that pushed the markets down dramatically. You had effectively a market crash with the Dow falling more than 880 points and the Nasdaq down more than 400 points. And that's continued overnight in Asia. The overnight Dow futures are down more than 300 points pre-open, and the Nasdaq is down more than 200 points. Remember, I've said all along, the high tech and high growth stocks are the ones that would be affected the most. All the startups and the SPACs, the special purpose acquisition companies, are now more or less worthless. And all those employees who have options in the startups, those options are worthless. They're just not going to get to the money level. It's not going to happen, and that's going to have a big impact on consumer spending. Now, just go and digging a bit deeper into what's going on. You've got three factors that's causing a major crisis. You've got number one, remember you had quantitative easing, which was the stimulus package, including zero interest rates, that has pushed liquidity up to all-time highs and given the consumer huge purchasing power, whether it's in property or loans or car loans or investments or talking about virtual currencies, whether NFTs or Bitcoins. All that liquidity is empowered the consumer to go out there and buy, but it's a false stimulus. It's economy that's not built on entrepreneurship, whereby the entrepreneur's gone out there and built a business. The stimulus, the stimulus to the economy has come from a fiscal package, and now that fiscal package has come to an end, and that's causing concern. So not only do we not have quantitative easing, we now have quantitative tightening, where the Fed and the central banks across the globe are tightening their belts, raising interest rates and pulling in all that stimulus package. However, because the stimulus package was so great, then what's happening is that the money is still in the pockets of the consumer, and as long as it's in the pockets of the consumer, it's going to drive prices higher because they're going to go out there and spend. The other factor is the supply chain caused by Corona. That's also had a big impact on financial markets and companies, and that's caused also to a degree a level of inflation, because it's a supply chain driven issue, starting with China and finishing all around the world, where companies just can't produce the goods that they were supposed to produce or did produce pre-pandemic. And as a result of that, the companies' profits may be impacted, depends on where they're at, may be impacted by that particular slowdown in the supply chain or the break in the supply chain, and that is fed through all the way through to demand. So demand looks a lot higher than it actually is, because the supply chain issue is causing the disproportionate balance between demand and supply, where really there should be more or less equal. What you've got is low supply and you've got very high demand, and that's causing inflation. And the other factor is the unknown, the big unknown. In fact, we've gone into all unknowns. Quantitative easing was a big unknown. We just don't know what's going to happen, where it's going to go with that. Now we've got quantitative tightening, and we don't know where that's going to go and how that's going to impact on the economy. And the third factor, obviously, is war. And you never really know which way war's going to go, whether it's Ukraine or Russia or Europe. It's the first war in Europe since 1939-45, and therefore it's an unknown. We just don't know which direction it's going to go, and whether Russia is going to continue with its attacking Ukraine or it's going to withdraw. My view is it's going to continue from a pride perspective and not going to give in whatever happens. So you've got those three factors that are impacting also on inflation. I mean, Russia, Ukraine's impacting on all the grains, the commodities, the soft commodities, the oils, the metals, etc. And that's had a big impact on global inflation. And all those three factors are going to continue. They're not going to disappear. The cancelling of quantitative easing, the introducing of quantitative tightening, the supply chain, and the Ukraine-Russia war, all those unknowns causing uncertainty, and therefore you've got inflation to stay here long term. Based on that, all the virtuals and all the assets that are highly inflated are not real, the fantasy assets, they are going to fall significantly, starting with the high-tech stocks and the high-growth stocks, Bitcoin, Ethereum, and all the cryptos. And then you've got the highly inflated other shares that are going to come off, and it's going to feed right into the property price market. And you see properties are going to fall around about 25% over the next 12 months. So this is Mayor Walensky with Driving Markets. Have a good day.